Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. And let's see what is going on the markets. First we start with the calendar. What we have on the calendar is the PMI day on Wednesday. So PMIs are the most important data on Wednesday. So far we got PMIs from Eurozone, from Germany, which came worse than expectations. And Euro is going down today. There is a slight influence of this data, but not necessarily. All the drop is triggered by this. We had some signals of the weakness of the euro much earlier than this. Still to come data from the Canada, the most important data today, rate statement, rate decision, press conference, monetary policy report. All this is going to happen in 5 hours. Before that, we will have PMIs from US, and that will be it for the Wednesday. Let's move to the charts, because on the charts we do have a few interesting trading signals. As we said yesterday we were waiting for those signals. Today those signals are happening. Some of them happened yesterday evening, so let's see how many proper legitimate signals do we have at the moment. First is Kiwi, New Zealand dollar to American dollar. Maybe let's start with the daily chart, because the price at the beginning of the week bounced from the long-term downtrend line here. Okay, both of them, here and here. Fair enough, so there is a downtrend. But in the same time, look at this. The price created a head and shoulder pattern. Left shoulder, head and right shoulder. So the price bounced from this resistance with the head and shoulder pattern. Left shoulder, head and right shoulder. Right shoulder at the same time is a pennant. Those orange lines, this is a small pennant. At the same time, the lower line of the pennant is the midterm uptrend line here. So we broke that today. Those two. This opens us the way towards the neckline of the head and shoulder formation, but in my opinion, neckline should be broken easily too, and we should get a further slide towards the lows from the beginning of October here. So if you're planning to enter here, stop loss above daily highs seems appropriate, so 26 pips. Take profit is 100, let's say even 110 pips. This makes a legitimate risk to reward ratio. Potential profit is more than 4 times bigger than the potential loss, which makes it a great trading opportunity. Next instrument is Euro to Swiss franc, where we also have a nice sell signal. So on a daily chart, you can see that the price bounced from the horizontal resistance. It was support here, here, here. It is a resistance here. The price tried to break this resistance for 3 weeks. As you can see here, that is Friday, then Monday, Tuesday, Wednesday, Thursday, Friday, and then Monday again. We have a triple top formation, then a downswing break out of the horizontal support today, along with the lower line of the flag. This is a flag. Flag is a trend continuation pattern. Trend before creating a flag was negative. So downtrend, flag, downtrend, flag, downtrend, flag. Most probably a downtrend. That is also a very good sell signal. Let's see the potential target. This the risk to reward ratio. So I think that opening here, stop loss above daily highs, so let's say 40 pips, and the potential profit is on 200 pips. Potential profit is 5 times bigger than the potential loss. That is a very good sell signal. And now New Zealand dollar, now cable. Okay, situation cable is beautiful, because that is a drop, that is a correction. Correction retraces 38.2, which is also a horizontal resistance created by the previous price movement. So the September, we had a bounce from this line. In October, buyers tried to go higher, but they bounced from this line as well. So if they don't want to break the upper line, they most probably will break the lower line. The lower line is legitimate support, was a legitimate support. Look at here, 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 here. And it gets broken. After the breakout, it's tested as a resistance. The test is positive for the sellers and the price goes down. So that is also a legitimate trading signal. In this case, potential risk to reward ratio is a bit smaller, weaker, worse because it's 130 pips, potential take profit to stop loss to 260 pips take profit, so 2 to 1. Which is still good, but you have better. I showed you examples of better. These are three examples, trades that I was showing on a Trading Sniper video. So the best from the best. Now let's move to the instruments which also have nice trading signals but didn't make it to the Trading Sniper video. We start with Australian dollar to Swiss franc, where yesterday, 2 days ago, we had a legitimate sell signal, but as you can see, this is being denied right now. I'm very happy that I didn't enter here. Yesterday, 2 days ago, I was full of hopes for the sell signal. A bounce from the 38.2 to shooting stars drop. But yesterday brought us a reversal from the horizontal support. Also, you may see inverse going to show the formation here, left show, but on a different time frame, smaller time frame, I seldom go there. But left shoulder head and right shoulder, it's clearly seen here. So now we do have a reversal, which we'll see what will happen on this green line. But as for now, you can see it's being tested as a support. So to the support here, then resistance. After the breakout is being tested as a support. So Australian dollar to Swiss franc had a nice sell signal, but the sell signal is no longer here. Gold, as we said, that they will reach 38.2 and most probably that will result with a bounce. And this is precisely what happened. Why? Because 38.2 is a legitimate resistance. Here, support, resistance, then 38.2. And we are hoping for a bounce because the price was respecting 23.6. So we had price was respecting 23.6 and 38.2. So this is a nice occasion for a short-term sell, but in the long term, the sentiment remains positive. That's nothing. That's just a typical bounce from the resistance. But in my opinion, the sentiment is positive as long as we stay above the lower red line, because that's the support of the recent formation. And the thing is that when we will break the lower red line, that will trigger the double top formation and can initiate a bigger reversal. American dollar to Japanese yen. The trend line uptrend line got defended again. Here. This line is no longer here. This line, let's say this line is. Head and shoulder is no longer here, so we can remove it. This trend line is no longer here. So what is left, guys? What is left is a flag, upper line, lower line, above the uptrend line. Flag above the uptrend line after a drop suggests a further drop. Why? Because look at those bounces. Very fast. And here, buyers are hesitating. The selling pressure is on. And the flag would be a continuation of this movement. So downswing, flag, most probably a downswing, most probably a breakout of those. And this is a nice support. Breakout of the blue line, which was a support here, 17th, 18th, 23rd of October, breakout of that will be a nice signal to go short. Australian dollar to Canadian dollar, that is a sell to. A flag, downswing, flag, downswing, flag, most probably downswing, especially that we are bouncing from the long-term downtrend line. So that is definitely a sell signal. If you want to wait a little bit for the confirmation, you can wait for the bounce of the lower orange line. Australian dollar to New Zealand dollar. Downswing correction, downswing correction, downswing correction. Most probably a further drop. But actually this can be a nice selling opportunity. I'm very curious if we do have a correction equality patterns here. Let's check. Almost. But the price getting there will create a correction quality pattern. And also will bounce from the horizontal resistance. So we're gonna check if it's going to happen. Euro to British pound. Downswing flag. Most probably downswing, especially that we are below the blue area. But for this, we still have to wait a little bit. New Zealand dollar to Swiss franc. Head and shoulder pattern, but the sell signal will be created when we will break the lower blue line. As for now, nothing. New Zealand dollar to Japanese yen. That's interesting. Downswing, flag, most probably a downswing. The thing is that we do have a clearer support here, which is a neckline of the left shoulder head and right shoulder pattern. Breakout of the yellow line will give us a sell signal. So these are the instruments that I had prepared for you yesterday, and now we can move with the rest of the instruments that we did not mention yesterday. American dollar to Canadian dollar, remember, very interesting situation here, because not from the technical point of view, but from the fundamentals, because we have this interest rate decision today. From the technical point of view, what is happening here is a flag. Flag is also above this horizontal support, so this one promotes a further upswing. So there is an inverse kind of shoulder, left shoulder head and a right shoulder. Then we break the neckline, then we test this neckline as a support. Breakout of the upper orange line will be a proper buy signal. So this is the setup on the American dollar to Canadian dollar. With the target at least here. So this one stays. American dollar Swiss franc, we mentioned that I think yesterday, and I didn't find anything interesting. All right, fair enough. We do have a breakout of the upper line of the flag, which can be promising, but the thing is that we are very close to the resistance. So this is nice. I mean, by this, I mean a breakout of this line. Okay, but I guess that we need something more. We need something more encouraging. Okay. Because the price can bounce from here and it wouldn't be anything like surprising, because the price is already respecting this level. But the American dollar to Swiss franc breaking the yellow area will be a proper signal to go long. So price closing above the yellow area will be a nice signal to go long. Let's see what will happen here. Silver. Silver is below this important resistance and it's getting closer to the breakout. That's a triangle, long-term triangle. Also kind of an inverse shoulder pattern, left shoulder head and right shoulder, not the prettiest one on the record, but still. Horizontal resistance break, price closing above the orange line will be a buy signal. But we already have gold, so no reason to follow this. Now let's check the oil. US oil had a nice slide yesterday. Was that surprising? Well, not really, because we already had a downtrend here. There was one trend continuation pattern, which was a pennant. And there was another trend continuation pattern, which was a descending triangle or a rectangle. It doesn't really matter. What matters is that we broke the lower line of this pattern and the price is going significantly lower. What is important here is that we broke long-term uptrend line. So the troubles for the oil started. We do have a horizontal support here, and let's check the Fibos. 38.2. And also look at this. 23.6 were horizontal support. So that gives us reasons to that backs up our opinion that 38.2 can be a legitimate support because Fibos were already respected here. 50 will also be a legitimate support taken from this resistance and this support. So oil is going down. I'm personally quite happy with this. And we will see where it will drive us. Definitely to the cheaper petrol on the petrol stations, which is personally good for me. Now DAX. DAX, you remember, had a shoulder pattern, horizontal neckline, broke a neckline tested as a resistance, successful test. Here we said that we have a confirmation of sell signal, and we do. That is a proper sell signal. So it seems like the correction on the indexes will continue. That looks quite bad for the buyers of the stocks. As for the indexes, I always check the S&P 500. For me, it's the most technical index. I like it way better than the Nasdaq, for example. And we have new lows. So we had this first panic here, panic selling at the beginning of October, correction, then another one. Was that surprising? Well, not really. Look, the same thing happened at the beginning of the year. Oh, I'm sorry. Drop, correction, drop, making new lows. Is that looking familiar? Drop, correction, drop. So buyers can still defend this uptrend line. They still can do this. If they will fail, the support is, I guess, somewhere here. So European indexes looks much worse than the S&P 500. Well, it's because of the fact that we are much higher on the European indexes, on the American indexes before in the first place, right? But technically, We do have sell signal on DAX, and on S&P 500 we are very close to sell signal. So we're in a better situation. Let's check Nikkei, Japanese index. Because here, and that's S&P 500. Let's check Nikkei. Because on Nikkei, we broke the long-term uptrend line. Here, 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 and we broke it. At the same time, support, 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 resistance. This trend line was tested as a resistance today, and it was confirmed as a working strong resistance. So we do have a sell signal on Nikkei. Now let's check Bitcoin. Although the volatility on Bitcoin dropped a little bit, so as you can see here, we are still under the influence of this downtrend line. What is interesting, that this downtrend line was broken, but it does not mean that we have a buy signal. You know why? Because the price was just pushed outside of this line. That's not a breakout. We just run out of space, but it doesn't mean that we do have a buy signal. And I remember that we had this kind of situation on one of the forex pairs like a few weeks ago. I cannot remember exactly the instrument, but we had this. So the volatility totally disappeared. You remember this huge upswing from the 15th of October, but then we had a sideways trend drop, sideways trend, now upswing, but does it change anything? No, it does not change anything. The sentiment is still rather negative on this pair, and I see higher chances to test the lows below $6,000 than new highs. I will finish the last instrument with the dollar index. What's happening on the dollar index is we are coming back to the strength of the American dollar, because we broke this horizontal resistance here. We are on the highest level since the end of August. That is a legitimate signal to go long, even despite the fact that we are on the neckline of the inverse and shoulder pattern. But the thing is that we broke this horizontal resistance, and that gives us a nice buy signal. So, quick recap: Australian dollar, Swiss franc, nothing. Gold, still buy. American dollar, Japanese yen, waiting. Australian dollar to Canadian dollar, that's sell. Australian dollar to New Zealand dollar, that's still sell. Euro to British pound, that's sell. New Zealand dollar, Swiss franc, nothing. New Zealand dollar, Japanese yen, waiting. New Zealand dollar to American dollar, that's sell. Euro to Swiss franc, that's sell. British pound to American dollar, that's sell. American dollar to Canadian dollar, that's buy, but we don't go anywhere near if you have tight risk control and money management, etc., because we do have a interest rate data later in the evening, so we are expecting much higher volatility here. American dollar to Swiss franc, that is a short-term buy, but watch out for this horizontal resistance. Oil, that's sell. DAX, that's sell. S&P 500 still positive. Nikkei, that's sell. Bitcoin, nothing. And dollar index, that's buy. So, quite a lot of trading signals, to be honest with you. I hope you enjoyed this daily analytical report. Now we'll have a short break, and after that a webinar about fundamental analysis. So I hope you will all attend this webinar. As for now, thanks very much for watching. In the meantime, visit our Twitter account and our website alpari.news. All the best.